Hello everybody, and welcome once again to the weekly report brought to you by Forex Live Today. Come and see us at the website forexlivetoday.com for all the latest news and analysis of the Forex markets. And when the news comes as thick and fast as it did this week, you need a good news feed. Okay, there's a lot to cover this week, so let's begin immediately with the equity markets. Okay, so here we have the S&P 500 chart, the daily chart. As you can see, although bears at the moment after Thursday and Friday will have you believing the end is nigh, you can see that we are virtually rage bound at the moment inside a nice channel. Fresh in everyone's mind, I'm sure, is Thursday and Friday's sell-off, but let's just remember that it followed Tuesday and Wednesday, which were remarkably bullish. So until we see a breakout of this range one way or the other, let's assume that equity markets are range bound. Having said that, the news that was coming out, particularly out of Europe, quite concerning. So to discuss that, let's look at the major currencies to begin with. Now, to start off with the euro. Okay, so the first news that affected the euro out this week was the Swiss National Bank making a quite surprise announcement. It had been talked about, but the speed that they came out with it was surprising to me in any case. That they are pegging the franc to the euro. Now, I call it a peg, but it's not really a peg because the currency will be allowed to move. However, if Euro Swiss gets to 1 or below 120, the Swiss National Bank has said, quote unquote, that they will buy foreign currency in unlimited amounts, whatever it costs. So anyway, we'll talk about that more in a moment. But what did it do for euro dollar? It caused this spike here on Tuesday. Now, last week in the report, it was titled Euro heading lower, and we did immediately in the start of the week head lower to this range low here. The announcement from the Swiss National Bank caused an immediate spike, which was then immediately sold into. Now, this was a very strong indicator of the further price action. Wednesday, we had some more positive news for the euro. We had the German Constitutional Court rejecting attempts to block German funds being used in the Greek bailout. The German Constitutional Court threw out that case. So again, we had a small bounce. Getting weaker and weaker, these bounces, aren't they? Thursday and Friday, as you can see, nothing could stand in the way of the negative sentiment. It all began with the ECB interest rate decision. Nothing extraordinary there. Rates remained unchanged. However, Jean-Claude Trichet, as he has done on a number of occasions, I might add, opened his mouth and started moving the market. So he was quite dovish. He talked about risks being to the downside. He talked about the need for funding and liquidity. Now, this is especially key when we're talking about euro dollar. As we all know, the euro dollar's status as a safe haven is all about its status as being the most liquid currency out there, the world's reserve currency. So this is when it really comes into its own as a reserve currency, when people start talking about liquidity. Now, you'll see as we look across the majors today, that one theme is common, and that is US dollar strength. So with the euro dollar, Trichet started the sell-off, and it continued, and you can see the supports that just went one after the next here, all the way down to Friday evening, bouncing off this support here a little bit, and then we closed. So who's to say what's going to happen into next week? A lot depends on Greece. Talks of default as early as this weekend. That has been denied by the Greece finance minister. There's a meeting of the G7 trying to coordinate some sort of rescue package where they're all going to move together, but they can't even agree on what type of statement to issue. How are they going to agree on coordinated action? So I'm not holding much faith in the G7. Personally, I see further risk to the downside here, and if we zoom out, you can see it has a long way to reverse. So all eyes on the weak euro. Moving across to dollar Swiss. Now you can quite clearly see here what effect the Swiss National Bank has had on the markets. And if we look further into the week, you can see on Thursday and Friday the dollar strength continued. This is a theme this week. The dollar really rallied this week, perhaps a sign of what may be coming in the future, this credit crisis Mark II perhaps. The financials, the banks just took a hammering this week. So it's one to keep an eye on. So that's dollar Swiss. I have euro Swiss here, and you can see again 1,000 pip moves on the Swiss crosses. So anyone who happened to be long, Christmas came early this year, and it came from Santa Claus, the SNB. So anyway, this could be the beginning here of quite a reversal. If we zoom out of this one also, you can see how far this one has to reverse. And one thing that's very interesting to note is this white line here. This is the 200-day moving average. Now you can see the last time it was above is back in June 2010. So that's getting on to 18 months or 15 months at least, and we're back above it now. So definitely something to keep an eye on. Perhaps the sell into strength on this pair, which has worked so well for so long, may be replaced by buy on the dips. But we'll just keep an eye on it for now and see exactly how the SNB are going to react to moves in the market. Euro Swiss is the one to watch for that. If it makes its way back to 120, are they going to hit it straight away? As soon as it hits 120, are they going to move in? Are they going to just come in once a day? We'll need to watch it for a while to see. Cable. I had difficulty trading cable this week, pound dollar. Once this support here at 161ish, 161 was gone, the trade was short. However, you can see these spikes up and down here. So I was getting bumped out at break even a couple of times. Having said that, we did continue with the bearish, and on the third attempt we did break this key support here. If we zoom out, you can see the long-term trend line, which is now gone. Something that I don't really recommend or do that often is keep a position open over the weekend, but I am actually open from this break here to the downside. So we have a short open on a cable. And finally, dollar yen for the majors, that is. You can see this rounded bottom starting to form. So what do we want to see for a reversal here? Well, we want to see further US dollar strength for one thing, especially if this need for liquidity keeps popping up. We want to see a break of this bottom of this previous channel, and then we want to see a close above 78.50. So channel and then 78.50 closing above there. It's looking good, looking very good for dollar bulls. Alright, I did mention last week that we would look a little bit at some of the commodity currencies, but it's been quite a busy week this week, so I will just do it quickly. Firstly, starting with the Aussie versus the US dollar. You can see how some positive data early on in the week for the Aussie dollar. We had unchanged interest rates, we had a very good GDP figure, and there was no dovishness to the commentary of the Reserve Bank of Australia's president. He wasn't talking about further stimulus. He wasn't talking about rate cuts. He was talking about, in times of uncertainty, maintain your policy. Don't chop and change. That's quite hawkish in this environment. So we saw some strength. We then had a very surprising jump in unemployment for the Aussie dollar, which knocked it back a little bit. And then the whole move on Thursday and Friday in the equity markets, the risk-averse move, did have some effect on the Aussie dollar. So what you want to look for when you want to trade the Aussie dollar is obviously news in Australia, GDP, interest rates, unemployment figures, inflation, like we look for in any currency. But you also want to keep an eye on China, because China is such a big trade partner for Australia. What happens in China directly affects Australia. And thirdly, risk sentiment. With high yields, the Australian dollar is considered a risk currency. So if you have a risk-averse move, people will want to get out of the Aussie dollar and back into the US dollar, and in the past anyway, the Swiss and the yen. So moving forward into next week, dollar strength is what I want to talk about a little bit. So as I've said, the need for liquidity, Trichet has been talking about it. The LIBOR rate is increasing. The short-term rates for the US dollar are increasing. This is what we've been waiting for quite some time. And on top of this, we have the French, the Swiss have removed the franc as a safe haven currency. It's now become a funding currency. It's so heavily manipulated that we cannot use it as a safe haven. The Japanese yen is also under the threat of intervention constantly, although they seem to do a lot of talking and not as much acting over in Japan. But the threat remains. All this points towards dollar strength. So let's see what comes next week. And one final chart I want to show you, something to look towards as we've been talking about Australian dollar. Here we have the Australian dollar versus the Kiwi dollar, Aussie Kiwi. Downtrend followed by nice head and shoulders, completion of a head and shoulders, and then a back test of the neckline. It showed a little bit of strength on Friday. Ideally, aggressive traders might want to get long from here, but ideally you would want to see a break and close above this support here, 128, and then we could be on for a nice reversal there. So another one to keep an eye on. But exciting times. Are we going to finally see the dollar rally? Let's see. Good luck everyone, and I'll see you all next weekend.